Hi guys, welcome to the Savvy Money Show with me, your host Sean. We'll be discussing the Airbnb IPO and we will be discussing a couple of other things. But to start with, we're discussing Masterworks. I don't know if you've seen it, but it's a company, SEC regulated. They buy up works of art and allow you to buy shares in them. Now, the thing is, you see here, it has like Andy Warhol or Banks's, and you have to think how many people can say they own a Banksy or an Andy Warhol picture? And it's on that level it's good, but if you go to open an account, you find out they want you to spend about 10 grand a year. I don't know, they may let you get around that, but that's where I'm sorry, goodbye, because they take 20% of any profit when they sell the artwork. Well, you expect them to take a profit, but and when you see how much profit they do make with some of them, you think to yourself, okay, then I understand, but you see here, one minimum investment is 10,000, and but as well as that, until they sell it, this is the kicker as well, they take 1.5% management fee. So this has actually been on, and I thought it was a brilliant idea. I thought, you know what, I'm interested in that. When they said $10,000 minimum, I thought, no, you're right. And because they do make a massive amount of profit, they will buy them for like 575,000 and sell them for millions, or they buy them for 2 million and sell them for 224 million, depending on the artwork. Now, the thing is, having that minimum, having the management fee and the 20%. Now, if I had one or the other, I'd understand it. I just think they would have been better off not having a minimum or even having a minimum investment of 100. If someone can put $10,000 on the artwork and leave it there for a long while, they would probably go out and buy something themselves, or they club together with someone and buy and not pay the management fee and not pay the 20%, because I think that ruins it. They took a great idea and they've ruined it. Anyway, let's move on. to the company that was started when 2 people, oh, I've gone Yahoo Finance, sorry about that. The company that was started when 2 roommates put an airbed in their spare room and called it a B&B. That's how they came up with a name. Now, when they do experiences as well, and when you get a country, which is Sweden by the way, listing on it, you know you're a big platform. I did a piece before saying how they were losing money. Before Rona, they were valued at 30 billion. Now they're valued at 18 billion plus 2 billion debt. If you remember, Ackman and Pershing Square offered to take it public via Spaq. They turned it down. And just a bit of, state school maths for you. 2,000 people check in every 10 minutes. So that's 12,000 an hour. Look at that. My education wasn't a waste of time, was it? Now, the IPO all depends on the price. If they are going to list it at 18 billion or 16 billion, then it may be worth it on the growth levels. But if they start doing something silly like listing it at 30 billion, it's a no for me. People are wondering why they're listing it now. I think trying to do it under the guise of Rona being being at fault for everything. They were losing money before, not as much. They hit profitability and then they started losing a bit of money, and I think they would have been losing money even if Rona never hit. I am under the impression that if Rona went away tomorrow and they were given another year, they wouldn't recover. I think it would take a while for them to recover. That's just my opinion. I'm some idiot on the internet. Now, I said before about how they're encouraging their hosts to double their rents in places that I was looking at, because they're under the impression that people are not going to travel, and if someone's searching for it. I went to a place last year, the rent has more than doubled, and the host last year was eager to rent it to me. They couldn't rent to anyone, and none of the places on there in the area have rented, and yet they're not even conversing with me, not even answering me. Now, remember in the US, they were all at risk of losing their properties because they were running them wrong. I think this all depends on the valuation at IPO. Don't get me wrong, this could be a very good investment if they do it the right way, but at the same time, this could be subject to legislation. There are a lot of countries that have protests over Airbnb, saying how it ruins the rental industry, because if, for instance, you can get in, right, if you can get a month's rent in a week by listing it on Airbnb, you list it on Airbnb, and then that pushes the rents up in the area. And then, of course, you end up with no social rent. So it's all it's a roundabout thing. Still, sorry about that. Yeah, have to decide yourself. You have to be happy yourself. I was speaking to someone else who's a subscriber and an active contributor to this channel about the tanker stocks and DHT, and they're saying how good the dividends have been for them. Oh, sorry, that's where that's where I was looking into something else. Not DHT. How putting DHT tankers and all this weird. Basically, 33% dividend. I said to them how I got in because of the financials, and they were one of 3 tankers I got into, and unaware that they were going to do 33% dividend. And to tell the truth, I got in at a high. I got in about $6. And I found it cheaper to buy like a tanker stock and an oil stock than to buy an oil stock pre-Rona. And of course, the way I looked at it at the time was I get dividends from both. This was when Yahoo Finance declared the dividend as 7%. Look at now, 33.63. I banked over $80 in dividends this month from DHT alone. It's crazy. $2 for a $5.50 share or $6 share. It's crazy. And if you look at it, you know, all those people who were hyping over NAT because Jeremy and Kramer said, look at the book value, $7. Current ratio. Yeah. I should tell you all you need to know, but let's show you. Right. Uh, 74 million. Yeah, I mean, this is the thing with 779 million in liabilities and 1.8 billion in assets. How can you I mean, it's got 137.5 million in cash. How can you argue with a company like that? Yeah. Free cash flow of 102 million. Yeah. I think when you compare to the likes of NAT, don't get me wrong, I don't think there's an issue with NAT. You know, it's at a good price, but the dividend is less than half. Okay? And yes, granted, we're not all in it for the dividend. I originally got in as a hedge against oil and Contango. It's under its book value, which is good, but the ratio is 1.8. Yeah, which is still good, but we'll have a look. And well, sorry, net income is basically for it is basically what DHT did last year, and now we've had like the Contango. Alright, total assets 1 billion, total liabilities 420 million. That's fine, but what you've got to realise is 101 to 182, because what you've got to realise with this company is their expenditure. Now, this company is, on paper, it looks like it's in a good position, but all their tankers are old tankers. They are going to need to replace them. Why haven't they spent money replacing them? Because there's going to be legislation coming out about tankers soon, so they don't want to replace them and then have this legislation coming out, and they need to replace them again. But the tankers need to be recertified, which is going to cost millions. Pretty soon it's going to be cheaper for them to replace them, if only for a year or two. And then have them recertified. You've got a lot of dirty tankers. They also get they have the smaller tankers than DHT, so they get less money for the rates are less. Now, Euronav has kept its money. I like Euronav purely because of the board, the type of people they are. Look at that. A lot of people thought after the dividend it would drop. It's just gone on the charge. The dividend is 17%, yes, but you know, this is a company that sold a used tanker that needed recertification for more than a new tanker would be. You can't argue with that. Operating margin of 47%. Book value per share 11.9. They're all under their book value. I did a whole video on this before, going through the book value of each one, and 4 billion. Basically, their assets are nearly 3 times their liabilities. It's 2.5 times. You know, you can't really. I mean, I sold out of it. I'm thinking I sold out of it too early, but look at that free cash flow, 600 million. Now, I'm thinking I sold out of it too early, but the fact is it hit my price point. So what do you do? I'll wait for, if there's a dip, fine. If there isn't, fine. The only thing about NAT is the board have said they will buy back shares if it's this price come January. Whether that's true or not is another thing. Anyway, don't forget to hit that like button. It helps with the YouTube algorithm, getting the video out to more people. Sorry about that. Don't forget to comment in the box below. Are you in any of these shares? Are you looking to go into any of these shares? Are you looking to take up the Airbnb IPO? And don't forget to hit the subscribe button if you haven't subscribed already. Become part of the Saving Money Show family. We keep each other updated with tips and stocks before I have time to put out a video. And don't forget to check out links in the description below. There's videos you may have missed. There's also links to other freebies and Amazon affiliate programs. As well as that, you will have links to free trading platforms where you get a free share worth up to £200 for signing up and depositing a small amount for a limited time. Free trade, giving you a chance to get a guaranteed share up to $10 over $10 if you sign up with $10, because I let out a secret that you only had to invest £10. So if you invest £10, I let out a secret that you only had to invest £1, and people were doing it that way. Anyway, you get a share, I get a share. It's a win-win. It's a way to support the channel. I don't charge a Patreon. If you subscribe, you get to ask me to look into any company you want. And I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye.